Hi everybody, and welcome to another edition of Talking Ball. It's the 4th of May. May the 4th be with you all. I'm Joe, joined by Steve. How you doing this morning, Steve?
Yeah, not bad, thank you. Not bad.
Good.
Few Larry moves yesterday, late anyway. Don't know if you saw the WTI on gold overnight.
I've seen it in the headlines that they moved pretty sharply. Was that on the back of the FOMC?
Well, it was a little bit later.
And the dollar?
Yeah, it was a little bit later. It might have been the dollar move itself, which kicked in maybe after the market shut. I'm not sure. I'll look at the timing on that.
Okay, let's break it down then and go through the latest headlines before moving on to the charts. So let's bring those up now. So the ADP reports stronger US jobs growth yesterday. It recorded an increase in private payrolls of 296,000 for April after a revised 142,000 increase the previous month and well above the consensus forecast of 150,000 for the month. So this is typically a bit of a precursor for the non-farm payrolls, which are due out tomorrow. There was little change in US services. The ISM non-manufacturing index edged higher to 51.9 for April from 51.2 previously, and marginally above market expectations. The rate of price increases was unchanged on the month, with significant price increases continuing. The Fed increased rates by 25 basis points yesterday, as largely expected, taking the overall rate to 5.25% at the latest policy meeting, which was in line with expectations, and the vote was unanimous. It commented that inflation remains elevated and the Fed is highly attentive to inflation risks. The statement, however, dropped references that it anticipates some real additional tightening may be appropriate. The Fed will take into account the tightening seen so far, together with economic and financial developments, and determine whether or not further tightening is needed. So there is no fireworks from Powell. According to his comments, there is signs that the labour market is continuing or coming into better balance, and there is evidence that wage growth has shown some signs of easing. He noted the economy is likely to face headwinds from credit conditions, although there is a high degree of uncertainty. He stated that there was not a formal pause for June and reiterated that the Fed would have to monitor data releases and economic developments closely. Overall, pretty non-committal tone, but he did state that it was possible that rates have peaked. The dollar lost ground yesterday over concerns about the banking sector. The statement from the Fed also had an impact, especially with expectations that rates would be cut later this year. Markets also remained uneasy over the banking sector amid further losses in regional banks. We saw oil and gold take some big moves yesterday, both of which, oil slumped and gold spiked. Oil was under pressure on Wednesday and spiked lower in the Asia session amid a lack of liquidity, and at the same time gold spiked higher to near record highs before correcting. So we'll take a look at those charts in a moment because that sounds pretty interesting. And today we've got the ECB. We're expecting a rate hike of 25 basis points there, although there is some speculation that there could be a 50 basis point hike, at which point obviously volatility will kick in. Forward guidance will be important for the euro and overall asset classes as well. So we'll be waiting that decision, which will be out around 1 p.m. UK. Okay, let's get on to the chart, shall we, Steve?
Yeah, I'll quickly go over Bitcoin, really, the move that sort of had before diving into gold. I don't know whether it reached its all-time high. Not on my charts, it didn't. So we'll have a little look at that. About 10 o'clock.
Share your screen.
Yeah, sorry, yeah. About 10 o'clock last night, really saw this move. Resistance had been around about the 28,900 area. Previously, we had a swing high to that Tuesday at 8 o'clock. And we managed to break through last night at 10 o'clock, and we're sitting a little bit above that hourly Ichimoku cloud now. So looking quite positive on the short term for Bitcoin. Obviously, if we look at the weekly chart, we're still in this area of resistance, so nothing really to get too excited about. Obviously, with dollar moving weaker, that will lend a supportive hand to Bitcoin priced in dollars. So looks pretty positive there. On the same sort of price action really on the Ethereum that followed, looking at maybe a potential top overall from a medium-term perspective. looking at head and shoulders top forming here. So again, not getting too carried away with this move to the upside. However, you know, both the short-term charts that I look at, the hourly and the 4-hourly, are above prices trading above the cloud, which shows it's a slightly positive trade on the short term. And XRP, similar sort of price action, 46 cents it's trading. It's broken above the resistance on the hourly chart, but it's still got bigger resistance up above, really around about the 46.80 cent level. So yeah, commodities really sort of like interesting, and funny enough, I was sitting in front of the computer last night when this spike happened, so it shows I'm working too late. But this is what the price action we've seen. We'll look at it on a weekly chart to show you basically. There's the spike higher, got up to 2067. We've got a 2070 spike high that we saw on the 7th of March, the week of the 7th of March 2022, and August 20. We've got the all-time high at 2075. So it could have hit an all-time high on one or two platforms, maybe. Depends, obviously, if there's a little bit of a less sort of like people trading, less liquidity. That's what the word I was looking for. But yeah, we've broken higher yesterday, which that's led to quite a positive weekly candle forming as well. So, but we can see this broke down. It only lasted for a few minutes actually, so this candle looks pretty strong, but prices settled down around about the sort of 2050 or 45 to 55 area, and it's come off overnight. So we are trading a bit lower, 2034 trading on a short-term basis. I think we're looking to buy a dip, but we're already long of that. Yeah, so overall, we had this breakout of the triangle. We had a break to the upside. It's been pretty comprehensive, pretty decent. Retested that reverse trend line and pushed higher. However, we've just started to give up those gains that we saw last night, and potentially pulling back. Just to really need to see whether we've got that supportive structure coming from a weaker dollar. Really sort of like all based around the dollar now, and moving forward into the rest of the day. Funny enough, WTI crude oil had a big move. Crude oil didn't see it, but again, we saw this like spike lower overnight, and you can see that prices closed at 9 o'clock as they normally do on the UK markets. European session closed at 68, around about $68, and then opened up at 65.50, spiked lower to 64.60 before rallying and closing higher. So for a short period of time, there was a sort of like quite a big premium between Brent and crude oil. Brent didn't see the same sort of price action because that closed at 9 and opened at 1, so it opens later. And then by the time Brent opened, things were back to normal-ish. So, but still looks a little bit bearish from a short term and a more medium term perspective. I was looking at the news sentiment stuff today, and overall that sort of seems to be in ground. This bearish sentiment seems to be here to stay. So there was a lot of things going on with crude oil as well yesterday. Natural gas hasn't really done a lot since we hit that low at 215 on this chart, been up to 223, resistance above, all the way up at 228. I think we're looking to set shorts a bit higher than that on our intraday basis. But yeah, that's pretty much the commodities covered off. It was definitely a bit of a humdinger for that short period of time overnight. Would have frightened people, I think, Joe.
Yeah, definitely. Lack of liquidity is a bit of a scary one, because if everything just dries up, that's when you can get these kind of flash crashes in markets where the bottom just falls out of them very quickly. So seeing that in oil was certainly a surprise. Okay, so dollar index. So it's been teasing us, suggesting maybe that it was going to break to the upside following the move out of this wedge. Then we started challenging this next level of resistance at 102.23, but we failed. So that was on Tuesday, and then we saw a gap to the downside yesterday, a really large big red candle back into this big area of support between 182 to 101.29. So we have found some support at this previous swing low from last Wednesday, or 2 Wednesdays ago, on the 26th of April. It's held for now. So we're seeing a bit of a fight back today, but if we start to break down through these levels here at 182, then that's probably going to suggest a continuation lower in the US dollar. So we did, maybe suggest that there could be a break to the upside, a bit of a corrective move. We didn't really get the follow through at all to the upside to confirm that. So for now, I think we have to stick with the dominant trend, which remains bearish and has done really since these highs back here in September last year. So still watching and waiting to see what happens with the dollar. And of course, the move here will really be quite important for a number of asset classes as well. So for now, it's very close to support. If the buyers are going to step back in, they're probably going to do it quite soon. So maybe opportunities for a speculative long, but you want to keep your stop pretty tight, because if we start breaking down through these lows, then that could trigger a continuation lower. Looking at euro US dollar, this isn't following through just yet to the upside. We are challenging again this level here at 110.75. We've seen a number of touch points now at that level, and each time we've got there, the sellers have stepped in to push things lower. Are they going to do it again today? We'll have to wait and see. We've obviously got non-farm payrolls out tomorrow. We had ECB out today as well, so that's going to be have a big say in things. It could potentially be the catalyst for a push to the upside here. If we can break above this level on a closing basis, then we are targeting a move to the 61.8% fib level at 112.75, and that just will mean that we continue to trade higher within this bullish channel on euro US dollar. So the bias overall is bullish, but we are into some resistance here that is stalling price action in the short term. Let's take a look at cable, see what's happening there. So prices were trapped within a very, very tight range. And following the break there that we saw on Friday, we've seen a pullback, and now we saw a pretty decent move to the upside yesterday. So that is a technical candle pattern. I can't think what it is though, Steve. Can you recall?
Which one's this?
This one here. So we've got the big impulsive candle, then the pullback, two pullback candles, and an engulfing candle again.
Yeah, it's a really funny name. We don't use it.
No, we don't very often.
We can call it the Joe conundrum.
Yeah, okay, that works. So again, looking pretty positive here. Trying to break, well, has broken through these levels here at 125.25, and now we're targeting a move up to 126.66. So looking pretty positive there on cable. We can take a look at some of the yen currencies, because they've been quite interesting of late. So we saw some yen strength. Was it yen? No, sorry, yen weakness. Yeah. We saw yen strength, and then we saw.
Well, we're seeing yen strength now.
We're seeing yen strength now. So we saw yen weakness. We saw this downtrend channel or downtrend line tested. We then rallied into this resistance here on Aussie yen and failed. So it's been a pretty spectacular reversal on this. And we were looking at big breakouts on a number of these currencies last week as a result of the BOJ. So we saw this with euro yen. So this is actually holding on to the gains. We saw the yen strength here, big break up to the upside. Prices continue to move higher, but then we've seen a pretty meaty correction over the last couple of days. But that is still above that breakout level. That was the highest level we've seen on euro yen for 12 years, I believe. So that's still above the breakout level. Maybe this pullback here would represent an opportunity to buy. Take a look at sterling yen. We can see prices here rallied into major resistance. These previous swing highs from back in October. We saw a swing failure and an engulfing candle here, a bearish outside day, and then we saw prices continue to move lower. So we're into a new support level here. We can see here a number of touch points that was previously resistance. We broke through that. Now we're retesting that as support. Again, maybe an opportunity for a potential long setup following this short-term correction. And let's take a look at dollar yen as well. So we saw prices rally to the upside, come up just shy of this previous swing high that was posted back in March, and prices have rejected and started to push lower. So still pretty undecided here and choppy sideways price action. So yeah, dollar yen not really of much interest to me. If I was going to be trading yen, it'd probably be against maybe some of the other currencies where it looks maybe a little bit more constructive from a technical perspective. Are there any requests? Aussie yen. So I've just spoken about that.
Yeah,
so hopefully that's covered
yen.
for Mark.
On TradingView, we got a Looney Tune asking, good morning, euro dollar. We have the ECB decision we have run into in long-term resistance. Do we pull back, or does the euro keep going up? Thank you.
Well, it's a good point, and we just mentioned about the euro here. So we can see if we go by the sort of longer term bias, we can see prices are within a bullish channel. So prices are moving higher, and we are making highs. Although we're failing to hold on to them for the time being, we are seeing a sequence of higher highs here and higher lows. Now we are into resistance, as mentioned, so we do need to consider that. It's obviously had a pretty spectacular run of late. Do you want to continue holding that over such a major event? It depends what your position is. If you're holding on to, a very profitable position and you've been riding this up the whole way, then logically making some, adjustments there, tightening stops, taking some off the table, maybe closing the whole position depending on your view, wouldn't be a terrible decision. They're not profits until they're banked ultimately. So you can sit on unrealized gains, but unless you actually bank them, then you can't consider them to be gains and as part of your overall profit and loss. So I don't know.
Yeah,
It's a major event. It's likely to create lots of volatility. It's then obviously going to create stress because it will start you second guessing. Typically, when you see reactions from big events, you can get big moves up, big moves down straight away. Do you want that additional stress? Can you deal with that stress? How have you dealt with that in the past? Have you got a good track record of doing that? All these things need to be considered when adjusting your trading plans, basically.
yeah, it sounds so complicated, Joe. It's like flicking a coin is like so much more interesting.
Yeah.
Um, this is I just sort of looking at the weekly chart really on the euro dollar, and we can see the main thing I sort of like focusing on initially the candles. Looking at what the candles are doing. Obviously, we've had this like great strength from early in March, and it's been quite an impulsive move higher, and we're sort of hitting these resistance levels that we've seen before, the spike higher that we got at the end of the week of 30th of Jan. Last week's candle was bearish, shooting star candle. This week's candle looks like it's forming a bit of a hanging man candle. So again, it's not, although it looks positive, it's not the most positive candle in the world because we've retested these lows here. So for me, it's sort of like where's the fibs now on this like long-term basis, and you can sort of see the resistance above as well. There's a big sort of like plethora of sort of like Fibonacci, previous swing, previous sort of like price action. And I would say we're running into further resistance. So I think the move higher, there's potential for move higher. ECB decision, like you say, you know, are they expected 25 basis points, Joe? Or
Yeah, there's some speculation there could be 50.
right, okay. Well, so that's your call basically. If they do go 50, then you'll see that spike higher. Dollars under pressure, and that remains so. Obviously, you've got non-farm payroll tomorrow as well, so that'll be interesting. But we've got a lot of volatility, and it's just, I suppose it's down to the central banks. If they become a bit more aggressive, it'll benefit the euro.
Yeah, indeed. Are we looking at the same fib there? You got what, 120,
112.23.
112. Yeah, I've got 75, but I was looking at the daily going from the highs from
Maybe,
5th of Jan.
maybe, yeah. Okay, yeah. 112.75, yeah. I took it from the sort of like the next, but yeah, there we had these sort of like edit wave, sort of impulsive move lower. Now we're getting that correction higher. There's a chunk of resistance above. And these are decent levels to be sort of like selling into if you look historically. Yeah, I mean, look at it historically. We've sort of like we're bouncing again from them previous. Look at a little dinosaur there. Just shows you how long ago it was. Yeah, so overall, I'd stay positive, be a bit careful if we break back below 109. In the meantime, try and ride it all the way to that like 112.75 level, slightly above, maybe 115. Why not?
Yep, agree. Okay, Steve, do you want to look at indices?
Yeah, I'll have a quick look at indices, quick scan through. FTSE's been under pressure this week. Obviously, banking sector getting hit, so there's a little bit nerves going on here. We've reacted from the 79.50, well, 79.38 high, moved lower, aggressive price action all week, looking pretty poor. And we had a little bit of a rally overnight, but it's been sold into. Support coming in at 77.23, break down below there. We should see further downside. 38.2% fib is around 76.57, so I wouldn't be surprised we get a pullback all the way to there. DAX is really holding on at the moment. And obviously, if we do go 50 basis points today, then that will be a little bit more pressure put on this. So for me, the bearish, the hanging man candle, bearish outside candle or bearish engulfing candle, and these sort of shooting star type candles don't look good. And we are at quite a significant support. So there's a lot that can open up on the downside on DAX. EU50 has also already broken that support 42.88. That's one we sold during earlier part of the week, and we also sold CAC, and that's moving lower as well. Next support coming in at 7,300. Same sort of price action really, with these rejection of away from resistance. The evening star formation has extended lower, and we've now taken out that support at the 33,280 level. We've pulled back a little bit overnight, so giving us another chance to sell into, maybe, who knows. Nasdaq under pressure. Last 3 days of price action have been negative. Support a little bit further down between 12,830 and 12,740, and the S&P also that evening star formation, looking for price action to move lower. Support really for that coming in at 4,050. So overall, indices under a bit of pressure, although they have sort of had a little bit of a recovery overnight. So yeah, opportunity maybe there for another gun to head. But yeah, I'm not sure what to go for today. But let's screw it. Let's do it.
Yeah, okay, just a quick one to go back to. We've had a request on YouTube to look at sterling CAD, so I'll do that very quickly. So this is the daily chart on this particular pair, and we spoke about for a fair amount of time this area here potentially posting a double top, not getting anywhere near it ultimately, because we can see prices broke through that level at 168.46 very convincingly on the 24th of April, and prices have continued to move higher to the upside ever since. We did see a bit of an attempt at a pullback, didn't quite get to the newly formed support, but all in all, this looks pretty bullish indeed. So looking very strong. Now looking to target these previous highs from back in February 2022. They come in at that comes in at 173.77. So for me, this looks very robust, very strong on the daily chart, and therefore I would be looking to buy on pullbacks and ultimately expecting a move towards this level at 173.77. Let's take a quick look at the intradays, because it is looking a little bit, well, maybe overdone in the very short term. Obviously had a very strong move to the upside, so do be a bit careful to try and plan your entries on a pullback if possible with that, but looking very good overall. Okay, let's move on to the gun to the head trade. So Steve and I are going to pick a trade idea each. Both of these ideas must have stops and targets. They must have risk reward ratios that are better than 2 to 1. We're going to close it out at 9 o'clock UK time, unless we are fortunate enough to hit the stop, or unlucky to hit the stop, or fortunate enough to hit the target before that time. We're doing it with a live account. We'll be risking 1% of our trading capital on each of these trades. So since we first started back at the start of 2023, the account is up. Don't know if you can bring that up on the screen, Steve.
Yeah, I will.
This is Steve's trade from yesterday. I wasn't on the stream yesterday, so Steve traded
I didn't
CAD
manage to get
yen.
it posted.
Didn't post it to the profile, but it did go on. You can prove that, I'm sure, Steve, on the trading account, and we can see that was a winner at the 9 o'clock close.
Yeah, I was very
Cool, you
lucky.
needed that candle, didn't you?
I did need that candle. That last hour of price action between 8 and 9 basically reversed the whole trade. It looked pretty good, pretty decent halfway through the day, or 3 o'clock, and then it had a rally back to where I got in. But then that last 8 o'clock to 9 o'clock candle, it aggressively moved lower, closed, at a decent. I was on side, think by about £34. There you go, £34. It brought it back at 99.10 after getting short at 99.77.80.
Okay,
So
so
yeah,
started off with
chuffed
£2,000 in that account. The net asset value, as you can see on the screen there, and it's currently at 2,068. So just about over
just over
three
3%.
and a half
Yeah,
are
yeah,
up.
not far. Yeah.
So
That's probably close to our best that we've done since the start of the year. I think at one point, Joe, we were down 10%. So
yeah,
nice recovery from the swing low.
yeah, indeed.
Just sticking to our plan, remaining confident in our ability to
It's just
sort of like,
consistency, isn't it? Just doing the same thing every day. 2 trades, both putting them on at the same time, letting them run throughout the course of the day. Not not taking any overnight fees because we're not holding anything overnight or any overnight risk. In which case, we're avoiding a lot of the big major economic events overnight that can upset these prices as well. And just risking the same amount of capital every day, a very consistent approach. And I think that is, one of the keys to trading, just turning up and doing the same thing again and again with a formula that you believe works. And I think that's exactly what we're doing.
yeah, it's just basically, and the win rate, Joe, 40% win rate, roughly, I think.
Yeah.
I know you've got the more accurate figures somewhere, but 40% win rate, you'd normally say, oh, well, that's not a great. I mean, it's not great, but we're sort of making these trades up on the fly. So we're not planning a huge amount. It's just whatever's going on. There's my doorbell. I'll let you go first, Joe. I'll just.
Oh, lovely. Thanks, mate. You've got to put the trade on, though.
Oh, yeah. Well, you have a think about it.
All right. Okay. I'm going to take a look at gold, actually. I don't typically trade this on the gun to the heads because Steve typically covers the commodities. But just looking at the daily chart, I'm just going to clean this up. I can't ignore this candle really that we're posting as things stand. So we obviously talked about this overnight spike, but this is the previous swing high on gold back in March. And if we look at this candle here, today we've seen a big move to the upside. We failed to overcome that level, and then we posted a pretty dramatic reversal here on gold, Steve. So this swing high from back in March, we failed into that level. Is that going to trigger a further decline in the price of gold? So let's take a look at the hourly, because maybe trying to squeeze a trade out of this. Ideally, I'd like my stop above that high, but risk reward is not going to be too favorable if I do. So I would like to sell at current levels with a stop at 20.48. So it is quite tight. Again, ideally I'd like it above there, but I'm being realistic. I'm trying to get in and out of this trade today, at least before 9 o'clock this evening. So longer term, based on that candle, probably I could be targeting much lower levels, but because we've only got a short period of time to operate within, this is what I'm going to go for. I'm going to target a move down to 2003.75.
Right.
Stop at 240, 2048, which should be about 2.2, 2.1 risk reward.
Yeah. Can we do points on there, Joe? No, we can only do right. So basically, we could do 1 unit.
Yeah.
Is £11.80 risk.
Yeah.
2 units is £24 risk.
Okay, we'll just have to go with 1 then.
1 unit. Yeah. Okay. That's all we can do. We can risk that. Try and do 1%, but yeah, it gives us that. So 2048 is the stop.
Okay, fine. Yeah, rather sticking to the rules, you don't want to go over the amount of risk that we should typically go with. So I'm quite happy with that. It's a lower risk trade on that basis in terms of how much capital we're risking, but let's see what happens. A win's a win at the end of the day. If it comes in, the risk reward ratio is still 2 to 1 or better.
Yeah. Okay. Thanks, Joe. Yeah, I'm sort of use that opportunity really to sort of like try and get some idea of what to expect next. For me, I still feel maybe euro dollar. Let's go euro dollar, and we have sort of stalled at those highs, but we have got this event coming up. The central bank today, 4-hour charts. I mean, it's looking bearish technically for a short-term pullback. I might go for it, Joe, but be quite aggressive with it so that I maybe I'm out before we get to who the ECB. I don't know. Even when I'm drawing this on, I don't feel that it's got that much in it. Right, what did I do yesterday? I did Canadian dollar, yen, euro, Oz. Euro, Oz, Aussie CAD. Come on, Steve. You haven't got all this time to sort of think about it. Dollar, Swiss. That dollar bouncing back, isn't it, Joe? New Zealand dollar, New Zealand CAD.
I was noting that. What about these indices? That Nasdaq one looked quite interesting, rolling over.
Well, you think further downside on the indices? I mean, I am up for that because the weekly charts look a bit crappy. Also,
Well, the European ones, what's CAC
yeah,
and Eurostock's doing?
I mean, they've had that spike lower.
Yeah,
they look under pressure. I don't mind going like short again on the EU 50. Let's get short here. A little bit of room to the downside. Yeah, if we can move this up, that'd be even better. Trying to get this trade on here. Yeah, let's go with that. It does feel, oh, I'm on the wrong bloody, and I've got to draw it again. Want to sell at market, risking 1%. The stop. You know what? I'm going to go for that, Joe. I'm going to just go hit enter and go for it. So my stop is at 43.09. Targeting to move to 42.41.
Nice.
Sure, yeah. So let's see how that goes.
Okay, we'll get those published up to our trading view profile, signal_center. If anybody wants to check those out, I've just done mine on gold, so that will sit there. And if anybody wants to check it out, you can click the play button, follow its journey throughout the session. In terms of data today, let's be aware of what's happening just to keep you guys informed. So we've got Norge's bank policy decision, which is due out in 25 minutes. I'm not sure that's going to rock the boat too much on the currencies you guys are trading, but you never know. You may be into the Scandinavian currencies, which could be impacted by that. But 1:15 today really is the major event. That's the ECB policy decision. We're expecting a 25 basis point rate hike. There is potential rumours that it could be a 50 basis point hike. Obviously, all will be explained in the press conference that follows at 1:45. So that's when we could expect the unexpected with comments that come out from the ECB president. And 1:30, we've got US jobless claims as well. That will be maybe a bit more of an indication ahead of what to expect tomorrow, which is another big number, which is the US non-farm payroll number. Okay, that's it from us, Steve. Let's wrap it up and wish everybody a successful day ahead.
Yeah, cheers, everyone.
Thanks. Bye-bye.